cannot learn by reading the acts multiple times can be learnt from an adverse regulatory order.
I request our panelists for the session, CA Mohan Lavi, CA Ravi Anantharamiah, the Vice President and Group Controller, Wipro Enterprise, CA Archana Bhutani, Partner, Deloitte, to kindly come over to the dais and enlighten our Deloitte delegates on learnings from regulatory orders.
Archana Bhutani, partner with CA firm. Archana has nearly 25 years of vast experience relating to technical advice on corporate law, accounting, auditing and other related matters. She has also contributed as a specialist editor to the 18th edition of Ramaya. Archana has been special invitee to NACAS and has been a special invitee, co-opted member of various committees of the ICAI, such as the Accounting Standard Board, IND-IS, Implementation Committee and many more. Welcome you, ma'am.
We have with us CA Mohan Lavi, a qualified chartered accountant from 1989 with over 27 years of experience and has worked in various senior positions in finance and manufacturing and software companies. He is a partner with Messrs. KP Rao and Co. Chartered Accountants, Bangalore, and heads the Financial Reporting Division, and also is an author of books on IFRS, IND-AS, key audit matters. He's been a regular speaker at various forums on financial reporting. A warm welcome to you, sir. We also have with us CA Ravi Anantharamiah, the financial professional with more than 3 decades of experience. He is also a member of the Institute of Cost and Works Accountants of India and is presently leading controllership function at Wipro Enterprises as its Vice President and Group Controller. Prior to this, he has led internal audit function at GE India, also was CFO of GE X-Ray, part of Global Supply Chain Organizations. He was in the Internal Quality Assessment Committee of Bangalore University and is also a trustee of Sharjah, engaged in promoting Indian classical music. A warm welcome to you, sir.
May I now request CA Archana R. Maya, Vice Chairperson, Udupi Branch, to kindly come on to the dais and welcome CA Mohan Lavi with a floral bouquet. Ladies and gentlemen, a huge round of applause to our panelists. I now request CA Chandra Prakash Jain, MC member, Bangalore branch, to come on to the dais to welcome CA Ravi Anantharamiah, Vice President and Group Controller of Wipro Enterprises, with a bouquet.
A round of applause, my dear delegates.
I now request CA Surya Narayanan, Chairman, Kozhikode branch, to welcome CA Archana Bhutani, Partner, Deloitte, with a bouquet. A hearty welcome to you all.
I now request CA Sundararajan R., the Regional Council member, to give his opening remarks on learnings from regulatory orders.
Respected Chairperson, Geeta Madam, and the team of SIRC, and the speakers of this session, Sri Mohan Lavi, Sri Ravi Anantharamiah, and Archana Bhutani, and the members present here. I welcome you all for this technical session on learnings from regulatory orders. I'm a very old chartered accountant as far as this program is concerned, in this topic itself concerned, because when I started practice, there was no regulations like this. So I should be happy to hear from the panelists more as an audience rather than as a speaker. So I'm very thankful for the SIRC team to put me onto this job. Thank you. I now welcome the speakers of the day. Thank you.
Thank you, Sundarajan sir. Good afternoon. I understand that this is a post-lunch session, forced post-lunch session, and may not be the most exciting topic to discuss post-lunch session, but I'm quite sure that, both Ravi and Archana are going to make this pretty exciting for both of you all to sort of digest not only food, what you all have had, but also take away some food for thought also. I thought I'll just set the context behind why this session is important and what are we going to discuss really here, because I think right from yesterday and even in the morning session, there was a lot of talk about NAFRA and, a lot of talk about what the institute is doing for NAFRA and all that, all that thing was happening here. But I think where we are coming from in this session is talking about how has the auditing environment changed? How has the auditing environment changed? How have courtesy all these regulatory orders we are coming, and I'm not speaking only about NAFRA here, we have got orders from SEBI, we got orders from ROC, we got orders from the Income Tax Department. If you put all of this together, it appears that definitely the way in which the world is seeing the auditing profession has certainly changed from what it was, say, about a decade back. I keep mentioning this in many places. When Satyam happened in 2009, people asked this question, which was the company? They asked the question, which was the company? Oh, Satyam, is it okay? But I can probably tell you all with a great degree of confidence that if something similar happens today, people will ask, who's the auditor? They are not going to ask, which is the company. They're going to ask, who's the auditor? So that is the way in which the entire regulatory environment has changed. So what are going to be our takeaways from this session is going to be, what can we, and we are trying to tailor this to the small and medium professional, not necessarily the large, professionals here. What can be the key takeaways from these orders? There have been some extremely harsh orders, as all of you all have probably known. Some orders which have also got some value addition in terms of learnings for the profession here. So I think that is going to be the theme of our discussion. So I'll alternate between Ravi and Archana for this. And we'll leave a small space of about 10 minutes for your questions towards the end of the session here. I just wanted to sort of, set this in the context. And I will first ask Ravi and Archana to give their initial thoughts on this environment, and then I'll get into any specific questions. Ravi, you can go.
Thanks, Mohan. First of all, my thanks to SIRC for inviting me for this wonderful function. Probably I will just talk. A couple of people asked me here, Wipro means IT. I thought let me just explain that I'm not from IT, what Wipro is and what part of Wipro I represent. Wipro has two groups. One is IT, other one is non-IT, which is Wipro Enterprises. IT is called Wipro Limited, which is listed, and Wipro Enterprises is a private entity which is in the business of brick and mortar. Anything that is non-IT is Wipro Enterprises. There we are engaged in consumer care businesses and engineering businesses, which includes hydraulics, aerospace structures, 3D machines, and industrial automation. And we have got a revenue of around 18,000 crores per annum. 50% of it comes from India, 50% from outside. So that's brief about Wipro, which I represent. And coming back, to the topic of the day, I think regulators, whenever they are there, actually it helps any ecosystem to have matured processes. When we were young, probably we had only seen RBI as the banking regulator, which we probably studied in our syllabus. People of my age can recollect. Other than that, not so known regulators, but now we know is that one is probably for the food and drug, or for the films, the censor board, right? But gradually things started changing. I think we had SEBI coming up in 1988. And then in 1997, we had TRAI coming up as a telecom regulator. And then 1999, we had IRDA coming up for insurance regulations. But there was nobody for the financial regulation, reporting regulation. I think some catastrophe need to happen for that to bring in. And soon, we have enough and more catastrophes happening all the while, every now and then. The first catastrophe that really made this happen was the Enron and Arthur Andersen in 2002. So US woke up and then they constituted the Sarbanes-Oxley committee, and then as a result of that, the PCAOB was constituted, which started having an oversight on all the auditors and audit function. But India didn't really feel the heat of it at that point in time. We wanted probably one more catastrophe locally here, which Mohan just now referred, the Satyam issue in 2009. When that happened, we woke up and then we completely hold our Companies Act, and then a lot of new provisions were added, which included constitution of a regulator, in addition to a lot more other aspects as well. But still, the regulator didn't come in. And then for that to happen, there was one more catastrophe required in the form of PNB scam, which happened in 2018, as a result of which the regulator came in for the financial reporting. And that's how, the story of the regulation that's come in, in India at this point in time. And with this, there are the function of the regulators as well as has come into, it's taking shape. Any such regulation, there will be ways in which the various operators in the ecosystem really readjust. They are apprehensive in the beginning. They, are a little bit, concerned how the things will take shape. And I think with the 6 years of formation of NAFRA, I think gradually things are falling in place and we are moving ahead. I think with this opening remark, I hand it over to Archana to talk about her views.
Thanks, Ravi. Archana, go ahead.
Thank you. Thank you. First of all, it's a pleasure to be here, and thanks, Mohan, thanks SIRC for this opportunity. I know you said it's an after lunch session, but trust me, the good part is that this is not a very heavy technical session, so it'll be easier on your ears, and I'm hoping you'll be able to kind of join us for the discussion. The 2-3 comments, initial comments that I would like to share here is that if you look at the audit environment, the regulatory environment, definitely there's been a big change. The regulators, the stock markets, any stakeholder, they've become less forgiving. There is very little margin for errors now. The outcomes are also much, much more stringent than what we have seen in the past. You look at the level of penalties, the way debarment can happen. So from that perspective, of course, the environment is much, much more stringent. And the big thing is that earlier, the regulators could only proceed against the individual, the partner, but now the firm can also be, subject to the regulatory action. So the stakes, like I said, are much, much higher. And I think, usually we learn from our own experiences. But this is one area I think I'd rather learn from somebody else's experience rather than be in that position, make an error and then go through it. So I think it's to our advantage that whatever findings are out there, we see what we can learn from it. And my only request is that when you are going through these findings, trying to say, okay, what does this order say or what does that order say? Don't get lost in the details. The details are important. But you need to find the big picture also. So for example, if you're reading an order, it deals with something about PPE or inventory. You'll say, oh, I've looked at this. But what about other areas? Is it throwing up some conceptual, some attitude related or process or policy related, finding which could have a pervasive impact? So just, I think, look at any order or any finding from a much broader perspective to see what learnings can you incorporate. And I do see this change in the environment. I know people are very worried about it. We say, oh, there's so much of enforcement action. We are losing good people. This field is becoming very challenging, etc. But frankly, from the side I've been, I do feel there is some good in it. if I go back maybe 10 years, there was a tendency to be lenient, as practitioners. We would say, oh, listen, this is there in public domain. What has the regulator done? You'll find diversity in practice with very little action being taken on, let's say, maybe aggressive positions or inappropriate positions. I think there is a good side to it in the sense that it gets you to introspect, to see how you can challenge yourself, how you can raise that bar of quality. So definitely some positives there. And I think while we will, of course, through our dialogue, discuss some of the themes which arise from it. Like I said, don't get lost in the details, because when you look at the findings are across the life cycle. Okay? It starts from the client acceptance itself. What kind of client did you accept? Were you really independent? Then it goes on to your performance. Where were the gaps as far as performance is concerned? Be it skepticism, be it the judgments you make, be it reliance on certain work done by others, or it could also be about like I said, sufficient appropriate audit evidence being available. So many themes which are coming out, and I do feel they do challenge the traditional thinking. And I was sharing with Mohan a few days ago. I said there was a point of time if I asked someone to look at the business rationale of a loan. I was told, why should I look at it? I am an auditor. This is a business decision of the company. Why am I getting into it? And now you will see that theme coming up, business rationale, economic rationale. It is important because that is what gets you to see, is the transaction a legal transaction? What is the substance of it? Is diversion happening? So the economic or the business rationale becomes very important, because we also say accounting is substance over form. So if you do not understand the economic rationale, you can never achieve that. And sorry, I'm getting into a little detail here. Now just to add here, at times I feel people tend to see substance and form as two different things. They're not different. When I say substance, it is substance of the form. So if you're looking at an agreement, there is no way I can ask you to ignore the agreement. But what is the substance of the agreement, right? So lastly, I would just say that when we talk about expectation gap in audit quite often, but we talk about expectation gap more from the perspective of fraud reporting or going concern reporting. But I think these orders actually get you to think about the expectation gaps in a much, much wider perspective. When you look at the expectation gap, we say there are three elements. You've got the knowledge element, which is what we think we are supposed to do and what the public thinks. That's the knowledge gap. The second element is performance gap. Performance gap is what the standard requires me to do. I'm expected to do, but I'm not doing. And the third is the evolution, wherein we say, okay, the standards require a revision. I think when you look at the findings, they do throw up performance gap in many, many, many areas. And I think it is for our own good if we can see how to leverage these. And the last point I will make is that quite often I hear, quality versus growth, as if these are two different or opposing things. You can either have quality or you can either have growth. I don't really agree with it. I think you can achieve a mix. You can have a balance between the two. You can achieve growth while maintaining quality. So I would not look at these as two opposing factors, but something that can actually work together.
Okay, thanks Archana. Thank you for that. Thanks Ravi. Okay, just to put the numbers for the audience here, just to put you at ease on this NFRA front also, because everybody is talking about NFRA a lot today. They've issued 73 orders till today. 73 orders have been issued, out of which 46% are against two companies only. Those companies I will not mention to you, it's obviously there in the public domain. 46% of those orders are against two companies only, auditors of those two companies. The rest are scattered over, individual companies, and, we started from the ILFS thing and then came up to other things also today. So it's not really that the population of orders against auditors is not so large for us to get really, alarmed about it. There are issues, I'm not saying no, there are issues, and if you look at some of the orders, Archana was saying, some are actually, when we look at the order, we see, oh my God, they didn't do this also. They could not have seen this. It's always a post-mortem. As a post-mortem, we always feel it's better. As she was saying rightly, right from client's acceptance up to including what opinion you have to give, whether you have to give a modified opinion or a qualified opinion or EOM, all that has been discussed. So, but considering this population of orders, I really don't think we should get too alarmed about it. We should definitely be wary of it, but I don't think we should get too alarmed about the fact that NFRA are issuing such orders. I will proceed a little bit further and ask both the panelists this question, and I think this is something which all of you here would probably be of little interest to all of you. What I've been observing, Archana and Ravi, is that, you can correct me if I'm wrong, say if I'm wrong, auditors today appear to have become a little bit more careful. They've become a little bit more careful in their reporting. The reason why I'm saying this is because I myself have got a lot of calls from auditors, not of listed companies, not of large companies, small private limited company, some issue in some accounting standard. He is saying that, should I put it in my audit report? He is not referred to NAFRA. He is not referring to any of the regulatory orders. He is just asking me this question saying that, should I take that extra precaution and put it in my audit report as EOM or as other matter or whatever it may be? There are enough of paragraphs in SA 700 for that and other standards also. So I think the question which is coming up for, and I have the privilege of having both auditee and auditor in front of me, next to me rather. So I can ask this question to them, in turn. Ravi, as an auditee, do you think auditors have become more careful?
I think, Mohan, you need to permit me to go a little bit back, from last 3-4 years. So, as an auditee, I have experienced how it changed in 2003. At that time, I was heading the finance for a US MNC. So, suddenly we got, all of a sudden, 50 questions questionnaire saying that, hey, you have to put yes or no for this and send it back, fax it back. So fine, nobody had trained us on anything, so we just went through the questions. There was one innocuous question, are all our accounts reconciled? All accounts reconciled. I put no, and then I sent it, and there was a commotion at the headquarters. Saying, how can he says no? So then we got into a call, and then I had to explain, hey, look, I do reconciliations once a year, when my audit happens, and this you're asking me in December, so of course, and reconciliations mean what? Is it reconciliation with my debtor, my creditor, or if you ask me about BRS, yes, that is reconciled. So, everybody learned gradually. Then they said, fair enough, you give me a timeline. I said that I want a head count, and these issues happened. And then finally they said, okay, 6 months you sort it out. So nobody knew what to do. Now coming back to 2009, when Satyam broke out in February, the audit partner, who is a nice gentleman, affable person, he walked into my office. He said, Ravi, how do you manage your unused checks, you tell me. I said, fine, yeah, tomorrow I'll give it to you. He said, no, I want it right now. So I was like, you really want it now? He said, yes, I want to see all your bank accounts. I want to see how you're managing the unused checks. So finally he got out of my office after 1.5 hours, but he just had the control of the checks because nobody had an idea about how to go about it because it posed so much of risk. There was no format, there was no framework for this. The good thing right now is that I think we have got the standards, but at the same time, we also are trying to get to know how exactly it needs to be used. And if you go through the AQRR, which I think was the first of the review reports that happened, there were around 14-15 points there, which were basic on the independence of the auditor, or on the communication to those charged with the governance, or on the the kind of the engagement partners review that need to happen. So basic questions which they are asking, hey, are this happening? Because this is there in the standards, is this happening or not happening? If it is not happening, that was exactly what was put in there. And of course, regulator put his view and the auditors challenged it, that's going on. But the good part is there is a focus on the process that is happening, which helps us to grow from we cannot have the same process, we cannot have the same kind of a systems and the frameworks, what was good for 500 billion economy if you are aspiring to become 5 trillion economy. So this is extremely important, the spotlight on the processes on audit as well as on the accounting is extremely important for us in this growth and aspiring period.
I think when you say have auditors become more careful, if it comes to carrying out the audit, I think they should have been this careful always. So I think any level, any improvement as far as the audit process is concerned, I would welcome that. So if they are being cautious, if they are testing their judgments, if they're making reasonable judgments, you know, all those things, I would take that as a positive rather than really as a worry. What I would actually, to your point, you also referred to reporting, however. I think that is a cause of concern. Now, that's another extreme, okay, to say, let me put everything in the report in some form or the other, and that way I feel I'm protected. That attitude doesn't really, according to me, serve. I've always said, and I mean, in many, many other forums, that you may do whatever work you do. Your product which is available to the public is your report. The report is what you're actually issuing. And therefore, for your report to really have meaning, it is very important that the right kind of matters are reflected and in the right way. So there is a tendency, like you just said, if it's there in the report, I think I'll be okay. It could be something which requires a disclaimer, they may feel okay, or maybe an adverse. They think as long as I've put a qualification, I'll get away. Or now, after an emphasis of matter came in, they said, okay, what if I put an emphasis of matter? And there is also another aspect to it. If they're feeling worried about anything, let's just put it as a matter of emphasis. Now, I don't think that really helps. Putting let's say if I was to first pick up emphasis of matter, an excessive use of emphasis of matter will dilute its relevance. And also, let me tell you, emphasis of matter is a double-edged sword. You think you're putting something there and you're going to get safe. It also gets, it also gets highlighted in terms of attention. So be very careful what you're really putting as emphasis of matter. It is supposed to be something which is fundamental. It is not like a material thing, a fundamental thing. Only then do you bring it. And I think the orders also highlight that the judgment which is being exercised in the nature of modification is poor. I mean, let me not say poor is a harsh word. It can be improved. So recognizing when does something require a qualification or adverse or a disclaimer, I think is very important. I wouldn't say that you need to go overboard and become too conservative and just, spell doom for the company for every possible thing. That also is not the answer. It's about exercising judgment in a balanced manner. And I think we see this, even when you look at going concern, I see the same approach actually coming up as I do for modification. So if you're familiar with the going concern reporting, you've got material uncertainty, you've also got a close call situation. Now, as expected with any modification or any kind of reporting, there'll always be a concern from the client. And we've got one auditee sitting here, nobody really wants it seeing there. But there is a reason why close call came in. There is a reason why, what is the difference between the two? Now, the issue that comes is just like modification, the approach is, okay, instead of giving material uncertainty, can I make it a close call? So I'll give a note, okay? Or maybe an emphasis of matter, but not call it a material uncertainty. I don't think you can just choose to do these things. There are areas which call for material uncertainty and there are situations which will call for close call. I think finding that balance is very, very important. Reporting, I do agree with you. We do feel there is a tendency now, depending upon the client, of course, if they're able to agree with the client, there is a tendency to kind of be putting more in the report. I would be a little careful on that, yeah.
Okay, thanks Archana for that. And I think a follow-up leading question to this, maybe you can just quickly answer this. Would audit documentation solve the problem of not reporting the audit report? Would that help? Do you think that an MRL or would that help, or would you think that it is not going to help?
So clearly documentation is not a substitute for reporting. Documentation is actually just to kind of put into evidence the work that you have done. The finding out of the work that you have done that needs to come into the report is a total different matter. Having said that, documentation on its own has been a very important theme which has got highlighted through these regulatory findings. And I know what I'll say you would have heard many times, but the fact is if it's not documented, the regulators believe it was not done. And here, let me also take the benefit of also saying that please be ethical as far as these documentation issues are concerned. The regulatory findings also highlighted areas wherein even beyond archival date, work papers were added. When the regulators came for, let's say, inspections, documents were added at that point of time. I don't think these are, first of all, from a professional perspective, appropriate. And I think these will never help in the long run. When you are dealing with the regulator, I think it's better to come clean if there is a documentation deficiency. But documentation has to be very robust. I would put it like this, that any third party should be able to kind of carry out the steps that were written in the documentation and still reach the conclusion that you did. So the documentation has to be that speaking, that if I was to remove you from the engagement and get someone else to read it, do you reach the same answer? But definitely, irrespective of the relevance of documentation, you can't say it takes away the importance of putting it in the report.
Okay, all right. Okay, I'm just going to segue a little bit into a different area because we spoke about EOM and all, and I'll probably ask this to Ravi and then later on to Archana also. There is this thing called as key audit matters, which also is a part of the audit report, and we are seeing that key audit matters generally, revenue recognition and IT controls, many of these things. In case it's a bank, your provision for non-performing assets. These are template-based key audit matters which we are finding in many audit reports. And in fact, we recently had a situation wherein we even disputed whether it should be a key audit matter or not in the first place, because that was a, came in from an FRRB review, whether it should be a key audit matter or not. The entire substance of a key audit matter appears to be that there is a risk in the audit, which the auditor is, obviously identifying, and he is also giving you a sort of a written note as to how he has minimized that risk. I won't say mitigated, I'll say minimized only. He's only minimized that risk, he's not mitigating that risk. So I think the question to Ravi and Archana is going to be that, are we overusing key audit matters, or if I want to probably use a better term for this, are we just using key audit matters as a camouflage to what should probably come somewhere else in the audit report, or should not be a key audit matter? Either way it will work.
I think I will take this question as, anything specifically auditor need to call out something, whether it is in the form of CAMs or in the form of EOM. So the CAMs, when it started, it was good because it made the reports look different. But end of the day, you can't have excitement in the reports, always. So it will remain the same. If suppose there are 3 risks there in a company, probably that remains same for foreseeable future. Those risks will continue. So you will not get something new out of it, and it will be the same and it becomes stale. Whereas emphasis on matter probably could change a little bit, from year to year, depending on how the company is going through. That's how I look at it. So if audit report need to really, bring out the differences every year, probably that would be, difficult. But conforming that yes, it is complying with a kind of a standard, it's complying with a process, is something which would really be the job of an auditor. I would say, if the audit becomes boring, probably then it's good for the auditee, unless, we don't want audit to become exciting, because if it becomes exciting, then I don't think it's good for anybody. So if you look for excitement in CAMs as well as in EOMs, probably that is not the way to approach it. It will get boring, and boring is good, if you ask me, because the process is mature. That's how I view it, at a high level. I don't know, I'll leave it to you, maybe you too.
No, that's fine.
I think to some extent I'll have to accept. Like I said, there is a tendency to consider all possible ways of bringing it in the report. So the matter is there. There is, like I said, in pockets. I'm not saying this is widespread, but in pockets you see this tendency. Does it need to be a modification? Can I do an EM, or can I just do a CAM? So it is not just vis-a-vis CAM, but like I said, this evaluation takes place within the level of modification vis-a-vis EOM and vis-a-vis CAM itself. And somewhere, I think to do justice to our own responsibility, finding the right way of reporting becomes important. And I do agree with Ravi. If you ask me, CAM was a great opportunity. I'm using the word was, it still is actually. It's a great opportunity for auditors to demonstrate their relevance. Every time it was felt that there is a binary answer, yes, no, true, to the true and fair. This gave us an opportunity, to really highlight to the public the work that we were doing, because again, I'm repeating, I said this earlier, you do so much work, but what goes out is only the report. So the users never realize the kind of effort that would have gone in on difficult situations. So the key audit matter was a fantastic way of highlighting the work that an auditor does. And what was expected is that it will not be boilerplate, it will be specific to that entity. Of course, like Ravi said, some will continue, some will change. But unfortunately, I feel we have not leveraged it. It's gone into that boilerplate situation. You see them being repeated. Sorry, I'm digressing from the question. But I want to take this opportunity to make a plea that use it. It'll do wonders for the profession if we're able to use it and highlight the work that really goes behind all those contentious issues. But coming back, definitely there is.
All right. Okay, thanks. Okay, now again, I'll go back to Ravi for this. We have seen that there are so many regulations, so many laws which are applicable, and as we've sort of generally concluded, auditors are looking at a little bit more areas. They have become a little bit more careful. Ravi has seen audits for the last, 20 years? More than 20 years. More than 20 years. He's seen large auditors, he's seeing larger firms. Specific pointed question to him is, are auditors looking at anything in particular nowadays? Are they looking at, say, for example, related party transactions? Are they looking more at revenue? Are they looking at internal controls? Especially considering the fact that over the last 2 years, much of these things have come up for discussion. Are there any specific areas which auditors are focusing on? And for the audience here, it's not that you should focus on that, it's just what Ravi is going to say from his experience point of view.
I think some of the auditors who had the processes which were matured, probably they have not gone so much in terms of a difference mode to in their process today. But lot of others whom I see have stepped up, which is really heartening to see. So, which means they are asking questions, they're understanding the conceptual, because there has been, in fact, a flurry of regulations, as Mohan was talking, of regulations which have come in a short span of time for us. I think as a result of which, understanding each one of them, understanding the implication of that from a compliance angle, from a controls angle, right, and then arriving at a judgment is not very easy. So people have changed the positions, they have studied, there are a lot of, in fact, resources available, that the world has become transparent, and the good thing is the convergence is happening in terms of the standards and the literature that is helping everyone to really come into, some kind of a similar knowledge base, and hence view it, in its wholesomeness. So that's how I see. And then if you ask me, yes, are there some areas which are really chosen, which are sensitive? Of course, related party is a touchy area. And the kind of a rigor, the kind of the arm's length, ness of the transaction, the disclosures that are required there are really viewed very, very sensitively. The purpose of, in fact, even if it is a related party loan, the purpose of the loan, and also even some of the regulations in terms of the CARO has also helped us to really, move in there, to check in there, because if you look into the frauds that have happened, most of them emanate from the related party transactions. So that's a touchy subject anyway. So the companies and auditors which had good robust processes, they have continued, but they also now take the point of view that yes, there is one more regulator sitting to watch them. Others have really stepped up to really ask these questions. I have benefited from that as an auditee, I should say that, because these questions are very valuable for me to comply, right? And I really, when auditors ask this kind of a question, I really appreciate that. So as a result of which, that helps me to be really compliant, that helps me to look at it from where he is coming. And this whole enhancement of the audit as a profession, as well as impacting us in the accounts and other stakeholders, is really helping everybody in terms of its, getting the whole ecosystem into maturity.
I'm going to give a longer answer if it's okay. I think I do want to take this opportunity to share some of the areas which, because of the findings, are now getting more attention. I think first of all, let me put it like this: the level of skepticism, before I come to individual line items, the level of skepticism is seeing an improvement, and I'm very, very happy. I think if you ask me what is the biggest safeguard, or if anybody was to say what advice would you give me, I would actually say skepticism. And I know it sounds trite, but it's true. There's nothing more important as far as audit is concerned. So I do see a very healthy level of skepticism coming in. When you look at the findings, Ravi did mention, and I think earlier, some of these findings could be very basic, okay? And you're surprised, I think, Mohan, you also refer to it. You've seen issues like inventory measured at fair value. Now, which standard permits that? Or, related party transactions, disclosures given only for the current year and not for the outstanding balances. So very, very basic. I have not seen very complex transactions being part of the findings. So if you think, oh, this is where are the issues coming out? Surprisingly, it's in the more routine ones. It's not that a complex financial instrument transaction or a very complex merger and acquisition transaction. You see them actually, the findings are related more to your ongoing, more regular transactions. So I think that is why the level of skepticism going up is higher. And if I was to say what are some of the areas where attention has increased, and I think for the right reason it should have been there earlier as well, you do see definitely focus on related party and diversion of funds. And I do believe these do go hand in hand, because diversion of funds.
What is the other one?
Diversion of funds. Diversion of funds and related party usually will be in hand, because somewhere you're doing diversion to related party only. I think these, you could say maybe not so much in earlier years because of the way the transactions have also now become complex, the way these are getting structured. You look at the group structures as well. So I think that the complexity of the group structure, the complexity of the transactions, etc., have also given kind of opportunities for this to happen. And I'll go back to the example I did touch base earlier. And it is very, very important, because I do see an attitude change happening now. Like I said earlier, if a company was giving a loan to another party, and we would say, why is a loan being given? The question was, why should I question? It is a business decision. But tell me something, if I'm a manufacturing company, let's say, I'm not a financing entity, why would I keep on giving loans? I mean, that's not my business. Don't I need funds for my own operation? So if, let's say, an entity which is into manufacturing rather than financing is giving loans, you should actually understand why that is happening. And especially if it is loan to an unrelated party, why would I give it? What does it have to do with my business strategy? So if it's with an unrelated party, it should further get you to think, is that a via media? Is that just a intermediary, or is that party itself related? Maybe you've not identified it, but it's a related party. So there have been, with all due respect to the regulators, you see where they are coming from. If you were to introspect, transactions have been used to divert funds. Now, quite often we say as auditors, how would I get to know? Company A gave a loan to company B. How do I get to know what B did with it? And I think that is where, when you start asking the first question, why was a loan given? Half of the answer would come there itself. And then if I was to say, did you ask company B, what have they actually used the loan for? Quite often auditors say, oh, how can I ask that? Companies Act permits you to ask. So if you were to look at the purpose of the loan, the utilization of the loan, you would identify many of these. So definitely for the right reasons, related party. If you ask me, diversion of funds. Going concern is another issue wherein we've seen now a much heightened attention being given. If I was to quickly pick up a few others, impairment be it of PPE or from an ECL perspective. Then the EQCR role obviously has come under a lot of attention. That has also been there. And I also now see much more caution being exercised as far as judgments are concerned. So when you're making an estimate or when you're forming a judgment, why? If you made an estimate of 100, why not 90, 80, why not 110, 20? If you made a judgment of, let's say, a particular case going in your favor, not going in your favor, I think we do see now a much better level of skepticism. And I think two other areas, if I may highlight, is in the past we did see excessive reliance on management representation, the management rationale, the management assessment. I think that's now getting challenged, and the companies are also acknowledging it, and I think they do appreciate a constructive dialogue, and a discussion is always welcome. And the last bit, which we'll also maybe discuss later, is the using the work of another auditor or even a legal opinion. There was a tendency, if there is, let's say, if you're making any assessment of claims or your counter claims or litigations, quite often we will take a opinion from a legal person and say, okay, this is what I have been advised. Whereas SA 620 always asked you to look at the competence of the legal expert. It asked you to look at the basis of conclusion, whether the basis is robust or not. I think that's now getting challenged. You just can't take a legal opinion. So these are some areas where, if you ask me, we do see now more attention being given. Yeah.
All right, okay, thanks. Okay, so I think this next question is going to interest all of you all. So I'm not sure that Archana or Ravi will have an answer for this, but at least we can discuss this. Lot of focus on MSME nowadays. We've got MSME, payments being to be made on time. We have some 43BH in the Income Tax Act. They have to be paid on time. A lot of focus is there on MSMEs. I was looking at the MSME auditor. What are the relaxations he has got? He has got to follow all the 46 auditing standards which are there, if applicable, I'm saying. All the accounting standards, apart from whatever exemptions are given there, which MPV discussed in the morning, which are actually very few exemptions only. But compliance with all the auditing standards, compliance with all the accounting standards, compliance with CARO, compliance with the 3-volume Code of Ethics of the Institute, which is now coming in 3 volumes. It has become like a Sampatayang or an income tax now, the Code of Ethics. An MSME auditor has got to follow all of these things. A small and medium enterprise auditor has to follow all of these things. We know that in the limited time of an audit and the limited budget of an audit, if I may use the word called budget, it's not possible to, probably comply 100% with all of these things. I think we have to face it as a reality. We've got to face it as a reality. I have seen now many of the large firms over the last 2-3 years, they are telling me that thanks to NAFRA, I want to close the audit. The day the audit is completed, I want to finish my documentation also. They want to complete all the documentation the day the audit is complete, which is really not going to be, I'm sure it's possible if you've got very good software and all those things. But my question to Archana first and then later Ravi is that, is there a way out for the small and medium-sized auditor? Is there something which we can, I'm not saying it's a solution, but is there something they can do which would make their, I won't necessarily say the paperwork, but compliance with all this a little bit more easier? They may not necessarily can invest in the best of software. Is there anything which they can possibly do to comply with the law and still be a little bit more easier on them?
So the good news is something like this is being discussed. Okay. Though frankly, I am myself very curious as to what the end result would be. When I look at it from an accounting perspective, it was easier because you could say, okay, we'll relax some disclosures, etc., or give you an easier way of calculation. But when it comes to auditing, you always think, okay, if I need to check, get some comfort on the existence of inventory or PP, how can the procedures really be different? Is it documentation, that can be kind of made easier? I think personally, had you asked me this question maybe a few months back, I would have thought doesn't seem really relevant, though, because auditing standards anyway do look at for smaller entities. In some places they do give guidance. But like I said, the good news is the IAASB has already issued a set of standards for smaller entities, for less complex entities, and this has now actually been exposed by AASB in India. So I'm currently going through it, so I don't really have a good answer as to how they have really done it. But I would also encourage, this is a good opportunity for you also to go through it, to give your comments, because I think this may kind of, depending upon how it gets finalized, give some solution.
The Indian context also, yeah.
I think Archana answered on the auditing point on the IASB's less complex entities standards that is coming up, which definitely we look forward. From an accounting angle, I think probably it is not there in India at this point in time because we still have the accounting standards, AS in vogue. In other places, IFRS for SME has been rolled out, which in fact we use in many of the countries where it is up, that framework is in fact accepted, so that the local teams don't really get bothered. We got small entities in some of the places, some of the other countries where we use IFRS for SME. That really helps them to be less complicated, and the complicated stuff I pick it up at the global level here in headquarters, and I do that console level entry there for that. So that's how we do it there. And coming to, probably I'll just take one step further here on the MSME auditors you was talking about. I just remembered one Kannada proverb, Murti chikkadadaru kirti doddadu anta. So small firms are, in fact, their niche. I really, some of the firms, small firms, the value they have given in terms of the niche areas are really good. To just tell you, in India, we have in our group around 11 entities which are subsidiaries. We use for the complex entities where we have got M&A, where we have got large treasury transactions in the bigger firms. But all other entities, 9 entities, I use smaller firms there. And the value I get, because they are focused entities, either they're manufacturing entities or just pure investment entities, or they're just service entities. So we use small firms there because it doesn't really, so we have put a metrics for that, a threshold for that. And what do we look for in a small firm? Of course, the conceptual understanding of the India's framework is definitely required, the MTM, the OCI, etc. And also, the ability, in fact, to have that independence is really required. And I'll just quote a couple of examples where I was really heartened when in my association with the smaller firms, really, and my trust with them, it really enhanced, was that last month one of the small firms which I'm using, the partner came and told me, Ravi, I want to stop the certification work for you. My immediate thought was that I asked him, is the fee low? He said, no, I am doing a lot of process work for you. It will become a conflict if I continue to do the certification, so I'm stopping it. And it's a proactive action which I was pleasantly surprised with, that kind of a ethical kind of a behavior coming from that firm. Secondly, in last week we were just talking about with a small firm again, whom we use for internal audit quite a bit. He said the way he was stressing on the client confidentiality that is maintained, because that is extremely critical for companies like us. So he was stressing on how they really take care of the client confidentiality. And in other case, another small firm that we use, we wanted him to do some audit again, and there was a legacy audit that was having a kind of an opinion. He said that I personally don't agree with that opinion. So we said that, look, that's happening for some time, so why is it that you want to change it? He said, no, I don't believe in it. You can continue with him, I will not take this. So means they are taking stance, in fact, as individually stepping up and understanding the concepts and taking the stance, which is really helping us while appreciating, they're just not going by the business, requirement out there. They're stepping up, understanding the concepts, and also, proactively really working with us in a very ethical way, which is really helping us to, enhance our own, depth of relationship. So I just wanted to quote these examples, before I end.
Thanks, Ravi. I think that really helps a lot of people who are sitting here to give that confidence that the smaller firms also are adhering probably to all the requirements here. Unfortunately, I have a lot more to ask them, but unfortunately, we're running out of time. So what I'll do is quickly, I'll ask Archana and Ravi to give their closing comments, closing advice, if it may, to all of you all, and then we will wrap up the session.
So I'll try and be quick. We're also worried about the kind of sanctions and the penalties which are being levied. But when you go back and really read it, because I did try and have a conversation, can these be rationalized? And they said, okay, you go back and tell us where do you find these are really, really, unreasonable. Actually, when you look at it, there are only 6 cases where the debarment is for 10 years, and similarly, very limited cases where the penalty is for 1 crore or 3 crores. So I think as much as we may want to ask for relaxation there, I think somewhere we also need to kind of go back and introspect in terms of how we can meet the quality requirements. We are anyway there are discussions happening with the regulators as far as having a settlement mechanism is concerned. I think it will help reduce the burden of litigation. I understand MCA is looking at it. So that would be, according to me, a much, much welcome move. And the last bit I will say is that if you ask me, no client is bigger than the firm, and one client can break the firm down. That's the principle I've always gone by. And that's what kind of just make sure that, you maintain your level of skepticism. Yeah.
Thanks.
Maybe, a couple of points that I just want to point out here is the one on the orders of NAFRA that has come about, as well as the financial reporting quality, the report, basically, the FR or QRR. So if you look at the findings there, I just counted them. There were probably totally around 28 findings in the FR QRR. In the 28 findings, half of them pertain to Ind AS 109. That is on the expected credit loss. Most of them, because probably people think that it's very complicated. It is not now. Second, that there is a practical expedient available there, which probably we just need to probably apply it and use it and probably disclose it properly. That is one. Second thing is coming on the Companies Act, probably non-compliances, which are very simple, like listing of the subsidiary not done properly, or some other, differences, the fixed asset schedule not being done, properly. So these are the kind of issues which are board, report numbers are not matching with the financial statements. So they were very basic hygiene. If you look at 50% of the, FRR, QRR is about these basics there. Similarly, if you come to the orders again, it's primarily SA 250 and then SA 700 that's coming in there, which again emanates into the accounting. If I come to the accounting there again, if Ind AS 109 comes into picture. So I think it is primarily, it's very simple if you really get a hang of it and then probably address it. That's how it's panning out right now. That is, I think a little bit focus on that would probably help everybody to enhance our own probably service as well as our own quality of auditing as well as the accounting.
Thanks a lot, Ravi. And I think we are just basically going to wind up. So one thing which from my side I'll probably tell all of you all is that, and this is something which I've mentioned in other places also. Considering this entire discussion which happened today, I think one takeaway is that we need to be a little bit more wary. I'm not going to use the word called careful or watchful or whatever it is. But there is no better person who knows the client than you yourself. You know the client best yourself. In fact, I feel for all of us sitting in this hall, in this code of ethics, the biggest threat is the threat of familiarity. The biggest threat, I think, is the threat of familiarity. We feel we know the client well. The client feels he knows the auditor too well. And I think that is where this challenge comes in. I think in the present day and age, the only single takeaway I can have is that SA 700 has got, and all the remaining auditing standards have got enough and more paragraphs. When there is an element of doubt which has not been satisfactorily responded to by the client, I think you should report it. Thank you very much. Thanks Archana. Thanks Ravi. Sundarajan Salo.
Thank you, sir. It's a beautiful session. It has really been knowledgeable for me because I've been doing audit even before the standards have been set. So I'm very comfortable with whatever things is. But what I find from your dialogues were that Sri Mohan sir has organized this program so well, I can say in that way, because he has got one person who is an auditee, another person as an auditor. So it is a beautiful combination. So a person who can ask question is sitting on the right side, and the person who is who will be listening to the questions and answering the questions is sitting on the left side. Anyway, the person who is asking question, it is very easy for us to ask question. And it is very difficult for the person to answer the question if he is an auditee. Why I'm saying is, in the Mahabharata initially, a question was asked by Indra to one of the king who had come to the Swargaloka. There he asked one question. He knows if he answers, as she said, yes or no only we are getting it. If he answers yes, then he can be thrown to the Buloha. If he answers no also, he'll be thrown to Buloha. That's a question he had framed in such a way that what is the question is that you are the best king. Everybody is, whom you know as the best king in the earth. That's the question. If he says yes, then he is giving self-promoting. He is promoting himself self. So he has to be thrown back to the earth. If he is not saying yes, I am the one, then he is again telling lie, so he has to go down. That is the question. Don't think that it is a CA exam. So this is how it is asked. The asking question is very easy, and answering question is also easy if the other person understands the business. If the understands the business and he also understands the expectations of the auditors, then it will be very easy for both of them. Because the way she spoke, I'm able to remember of my olden days with Deloitte, because I also come from Deloitte. When it was Fraser and Ross. So I'm able to remember that, the way she spoke. Thanks for all the people who have done the work. I hope you also would have enjoyed this question and answer sessions. Thank you. Thank you so much.
Thank you very much, sir, for beautifully summing up the session. As the panelists rightly said, don't get lost in the details, but we have to look into the findings. I now request CA Karikalan A. Tiruchirappalli to present Chairman of Tiruchirappalli branch to present a memento to CA Mohan Lavi. I also request CA Anup Francis, the Chairman of Tiruchur branch, to present a memento, a token of our gratitude and appreciation to CA Ravi Anantharamiah. Let's hear it, my friends, to the wonderful panelists for discussing on regulatory orders. I also request CA Fatima Firdok, Chairman, Tirunelveli branch, to present a memento to CA Archana Bhutani. So as we all know, we have to traverse through our comforts and make all the complex compliances, never to compromise on our quality. We, as CA professionals, need to be very cautious, curious, so that we can present better outputs and effects. Once again, thank you to the panelists, CA Mohan Lavi, CA Ravi Anantharamiah, and CA Archana Bhutani, for this wonderful discussion on learnings from regulatory orders.